If you have a look at Ford's stock price over the last year and you see that Ford stock price has increased by 140%, and then you look at what happened to Ford's stock price in the previous 4 years before then, when the company went from $11 5 years ago to a value of only $4 1 year ago, you've got to ask yourself the question, what was Ford doing for those 4 years? And what are they doing so differently now? Hello, my friends, and welcome to the Electric Viking. My name is Sam Evans. Great to see you here on the channel. It's been awesome to spend 2021 with many of you. Welcome to the channel. All you new subscribers, welcome back. To everyone else. Ford. Wow. Stock price has increased by 140%. And yet it more than halved in value for that 4-year period. Why? It all comes down to one thing. Ford had no plan for those 4 years. They were just waiting along, hoping things would work out. All of a sudden, CEO Jim Farley comes along. The ship of Ford has a captain now. And Ford keeps on doing one very important thing, changing their plans. Yes, you can do that. It's okay to say we were wrong. That's what Ford have done. They've said on numerous occasions now, we were wrong. And boy, oh boy, were they wrong. I mean, if you were a shareholder of the company for those 4 years and you lost more than 60% of the value of Ford was lost. You'd have to be pretty pissed if you sold at that point. I mean, if you'd bought Ford stock at the start of this year and gained 140%, surely you would have to be incredibly stoked with that, considering the historical returns for this company. And only one thing has really changed here. Ford keeps on changing their production plans for EVs and for battery production. Now, they've just said that they've changed them again. Yep, they're now planning on producing 150,000 electric vehicles, while actually having a run rate of 150,000 pure electric pickup trucks in the middle of 2023. In other words, Ford's saying within 18 months, we will have the ability to produce a run rate of 150,000 pickup trucks per year, and that's happening very soon. And I've got to say, you know what, Ford? You deserve a pat on the back. This is good news, but come on. We need to see more. There's more than 200,000 pre-orders for this pickup truck. By the time Ford start to deliver these en masse, probably by the end of this year, you've got to say Ford will have at least 300,000 pre-orders, at least. It's going to take them many years to actually satisfy the demand that they have. So Ford, how about you up that run rate? 150,000. Why don't we push that to 200,000 by the middle of next year? I believe that'll help your stock price even more. You know what that does? That releases significant pressure on Ford for lending. Ford's lending is not that good. Their loan interest rates are, not that great. Other companies get better loans because they have a better balance sheet. Ford, this is helping your company. You know, if you are able to move from that 150 to 200,000, it's going to be even more beneficial for shareholders. So, what else does this mean? Well, number one, it means that people like Peter Sohan from Forbes think that Ford Motor Company, even though its stock has increased by 140%, is still a screaming buy. Is he right? Well, I want to share with you what Peter says. In May 2020, shares of Ford Motor Company bottomed out at $4.90 per share. Since then, the stock has increased more than 140% to $24. Now, according to CNBC, Ford beat out Tesla as the auto industry stock that went up the most in 2021. Now, who would have thought that would have happened, right? So should you buy the stock? Well, Peter says you should. Why? Because of soaring demand for the F150 electric pickup truck and a low valuation relative to other EV rivals. However, one reason you shouldn't buy is that Ford's revenues are declining. However, if Ford can grow faster than its modest expectations, the stock will keep on rising. So have a look at this, right? On May the 26th, 2021, Ford stock increased by 8.5% at Ford Investor Day when they revealed details of Ford's electric car turnaround plan. Then, on October the 28th, 2021, Ford's third quarter earnings included raising its yearly guidance and announcing EPS that doubled analyst estimates. Stock increased by 8.7%. Then, on December the 10th, 2021, Farley confirmed that Ford will triple production of the electric Mustang Mach E to more than 200,000 units per year for North America and Europe by 2023. The day before, he said Ford had halted reservations for its F150 Lightning at 200,000. Orders are going to open again in a week, I believe. That day, the stock went up by 10%. Now, these big Ford stock increases are continuing into 2022. Ford shares are up 10% today after after it announced EV production increases. Now, according to Market Watch, on January the 4th, Ford said it plans to nearly double production of its all-electric F-150 Lightning pickup truck at Dearborn, Michigan facility to 150,000 trucks per year to meet soaring customer demand. However, is Ford a good buy compared to other legacy automakers? Well, let's compare how Ford, Toyota, General Motors, and Volkswagen actually compare against each other based on their price to earnings ratios. Here's how Ford's PE stacks up. Ford's PE is 30, Toyota's is 10, General Motors is 8.17, and Volkswagen's is 7.74. In other words, Ford is valued at 3.5 times more than Volkswagen based on price to earnings. Is this a reasonable figure considering Volkswagen is also focusing heavily on EVs? I don't think it is, but you can be the decider for that. Let me know in the comment section below. What do you think? Is Ford a better buy than Volkswagen? I'm not so sure. Now, what's it going to take for Ford stock to keep on rising? Analysts expect the stock to grow at a long-term rate of 68%, according to an average of 22 analysts compiled by FactSet. Getting there, though, depends on whether it can accelerate its EV plans and reach an 8% adjusted profit margin before interest and taxes by 2023, said CNBC. Now, if Ford's total revenues can accelerate due to higher EV sales, investors may start to assign it a much higher price to sales ratio. That would make Ford stock a screaming buy. But the real question is here, can Ford and General Motors and everyone else in legacy auto actually make a profit out of selling EVs? My suggestion would be the answer is, in the short term, no. The long term, yes. But if you're a shareholder of the company, I don't personally think now is the right time to buy Ford. The start of this year, yep. Now, not so much. But let me know what you think in the comment section below. Thanks for watching the video, and I'll see you again on the next one. Bye-bye.